Wealth is a long-term game. You've got two jobs. You need to create wealth and then you need to protect it. Every year I do a set of predictions in December. So in December 2024, I did predictions for 2025. What's happened? What are the key themes? Was I right? Well, we're coming up to half time in 2025. Already, I know, we'll soon be talking about Christmas and how many shopping days there are. Where have you put your money? How have you increased your wealth and how have you protected your wealth? I knew in December 2024 that Donald Trump had been elected president. Now, this is not a party political, this is just an observation of the fact that he's erratic, he's not consistent, he doesn't listen to advice, and he appears to make up his mind about policy on the spot, very often announcing initiatives in social media. Now, why is all of that relevant? As an investor, it is critically relevant because markets hate uncertainty. They absolutely hate uncertainty. So I said 6 months ago that the stock market was going to be very lumpy. It was just going to be all over the place. And therefore, I took all of my funds out of the US markets. Since then, there's been a major devaluation of the dollar. We all know what's happened with hindsight, but you don't get wealthy by relying on hindsight. You use hindsight, you use history to inform your decision making. So I said tech stocks like NVIDIA, they absolutely crashed. At one point during April, they were down more than 30%. Imagine that's your pension. Imagine that's your family's future, and it's just had 30% wiped out in 4 months because of tariff announcement. So I said, don't do that. It's time to protect your wealth. Now, when you want to protect your wealth, you need to invest in hard assets. Hard assets like, and I specifically said, property and gold. Gold, for instance, is good as gold. Gold is up, it depends which currency you measure it in, gold is up more than 25% year to date in US dollars because of the dollar devaluation against the other currencies. But even in sterling, it's up 15, 16% year to date. That's like 4% a month it's gone up. And I also said, put your money in property. Well, the Office for National Statistics of the UK government releases a report every month, and the government statistics say that property prices in the UK have, over the previous 12 months is up between 8 and 9%, depending which bit of the UK. And the two extremes, London is the worst performing at just over 1%. In fact, central London is negative, but London as a whole is just about scraping by. And I specifically said, and I have specifically said for the last 7 years now, I'm not investing in London. Now, it doesn't mean you can't make money in property in London. You can, but you can't make money just by going to the estate agent and paying market price in London, and you haven't been able to for 7 years. In fact, there's some parts of London that still haven't recovered from 2014. So you've had like this 10-year flat period if the only way you know how to invest in property is going off to Foxtons and putting down 25% and paying all that massive amount of stamp duty. But if we're just talking about vanilla investing for normal people that are not property professionals, that don't know about buy, refurbish, remortgage, they don't know about blind below market value, they don't know how to raise private finance, they don't know any of that. For those people, which is the vast majority of people, I said, you need to look up north. And I specifically said Manchester. In the last 12 months, price growth, capital appreciation, property in Manchester was 14%. 14% capital appreciation in 1 year. And you then add to that a sensible rental yield, 7-8%, which you can still get in Manchester. London, it's still 2%. You're talking over 20%. So my core message, safe as houses and good as gold, and be careful of Trump and what he's going to do to the markets. It's almost half time in 2025. I'm just repeating it. And I also made some, what some people would see as more speculative recommendations. And I've done this consistently for the last 5 years now. I talked about Bitcoin. Bitcoin is at another all-time high, around about $110,000 per Bitcoin. If you're going to set yourself an objective to create and protect wealth, can I suggest the following? If you haven't got a property, if you don't own your own home in the UK, can I suggest that you set yourself an objective of buying your first property. And if you don't know how to do that, and if you think that's impossible, and if you think I'm lucky because I bought my first one in 1982, and you think it was easier then, you're wrong. It was hard, but I did it. The way I did it, you really don't want to do. I was working 120 hours a week. I was working 3 jobs, which took me about 100 hours, and I was a servant in a big house so I could live for free, for nothing. They fed me, they paid all the bills or whatever, but I was working 20 hours a week. So I worked 120 hours a week so that I could buy my first property, and I did it. But I did it as a 17-year-old, and I did it without a mortgage. I couldn't get a mortgage because I was too young. I bought my first property before I was 18. So you don't want to do that. These days, you can get 100% mortgages, you can raise private finance, you can do all sorts of things. And if you want to learn about that kind of stuff, get yourself along to Wealth Through Property. There'll be a link around here somewhere to get you to that. 2 days of your life, come and listen to us talking about how you can invest in your first property and you can get your first property. When you've got your first property, you need to do 2 more things. You need to get your first investment property, and you need to learn how to raise investor finance. The way that you become wealthy isn't by working like I did naively as a 17-year-old, 120, 130 hours a week. That's just selling your life for money. That's not going to make you wealthy. Wealth is when you have assets like property and it gives you money in exchange for none of your time. So your second job, having got your own home, is to learn to raise private finance. Because if you think about buying a property, 75 or 80 or even 85% of it is somebody else's money. It's the bank's money, but it's not really the bank's money. People put money in the bank and the bank lends it out. So all you're doing when you raise private finance is you're cutting out the middleman, you're cutting out the bank. Because why do people put their money in the bank? They put the money in the bank to get some interest on their savings. Well, if you cut the bank out, and if you give that person more interest than the bank is going to give them, why wouldn't they give it straight to you? Especially if they can have the same security as the bank's got. If you learn how to do this, you can show someone how to put a first charge on a property. So they can give you a 100% mortgage, they can lend you all the money, you can give them bank grade security, which means they can take the house back off you if you don't do whatever you've agreed to do. I wish everyone watching this, you could just download my brain. Maybe in a few years, maybe in 10 years' time, you can download my brain. But before we develop the capability to download each other's brains and instantaneously come to know what somebody else knows, you're going to have to get yourself educated. And your education starts, if you want to do this, with getting along to Wealth Through Property. Because once you've done those 2 things, once you've decided, I'm going to get my first property, and once you've decided, I'm going to come along to Wealth Through Property, and once you've decided, I am going to open my mind to the possibility of using other people's money and just cutting out the bank, then you're on your way. You can create wealth. Your properties will go up in value. You can release that equity. You can release that capital growth tax-free, and you can use it to invest in more property. And I would suggest strongly that you keep doing that until you've got £5 million worth of property. Then I want you to change. Because when you've got £5 million worth of property, I don't want you to have all of your financial eggs in one basket. I want you to get into other asset classes. I want you to have a balanced portfolio. But the first part of the conversation needs to be about how we get you on the property ladder, how we get you to be a property investor, and how you get some really, really solid wealth built until you've got to a few million. When you've got to a few million, we can have a different conversation. We can then talk about, yes, let's go and invest in some gold. Yes, go and invest in some cryptocurrency. Yes, let's go and do some private equity. A deal that I did last February, I invested 300,000 into a company called Green 8, and that 300,000, 14 months later, the return I'm getting, the profit I'm getting is 2.2 million. Now you can do that too, but you can't do that unless you can afford to write off 300,000. So I want to get you to 5 million first, and once I've got you to 5 million, let's diversify, let's protect. If you haven't already read it, download a copy of my 2025 wealth predictions, because they're still relevant. We're halfway. And like football, wealth is a game of 2 halves. So, you've still got time to do stuff in 2025, but you need to understand the way to go. Have a look at what I said 6 months ago. Make your own mind up how right I was or how wrong I was. and then make your mind up specifically about what you're going to do about it. Because many, many people complain about the world, whatever the world does to them. My bus was late. Pret a Manger didn't have the sandwich I wanted. They're not really problems, are they? Problems is when people are shooting at you, or your country's being invaded, or your kids are starving or something. So be real about what your actual problems are. Read my predictions, and never mind what the world's doing to you. Decide what you are going to do to the world.